The coronavirus job retention scheme has been extended to the 30th of September 2021. So as a limited company business owner who pays themselves a PAYE salary, you have an extended period in which to make any claims. In this video, we will cover the main changes to the furlough scheme in 2021, a limited company director furlough claim if you pay yourself a PAYE salary, and finally a quick word on HMRC Investigations and COVID scheme fraud. Before I get into today's video, be sure to hit that subscribe button as well as the notification bell to make sure you're kept up to date with all of our latest content. This really does help us to produce more helpful videos and to get you real quality advice from real qualified accountants. The government in 2021 will continue to pay furloughed employees up to 80% of their wages, up to a cap of £2,500 per month. From July 2021, this will go down to 70%, with 10% payable by the employer, and then down to 60% in August 2021, with 20% falling on the employer. This is most likely to coincide with the easing of lockdown and the UK government hoping that more and more employees will return back to work. Before we continue with today's video, we're thrilled to be launching the Accounting and Tax Academy membership site this year. We'll be posting downloadable resources, tax tutorials, and exclusive courses that you won't find anywhere else. And the best part of it is, it's absolutely free to join. Head to the link in the description box below to find out more. If you are a small limited company director shareholder who is paying themselves an optimal salary, then let's go through an example as to what your furlough claim could look like if you're claiming for the 21-22 tax year, using the figures just published for the UK budget in 2021. We have done a comprehensive video on the UK budget 2021 and how you can pay yourself tax optimally as a director in the 21-22 tax year. We've also published a downloadable guide which you can access by clicking on the link above. So let's assume you pay yourself a director salary up to the new 21-22 personal allowance threshold of £12,570 per annum, which equals £1,047.50 per month. If you want to make a furlough claim for May 21 and June 21, you can do so, and you will receive government support of 80% of this amount, which is £838 for each of these months. At this level of annual director salary, there will be no employer's national insurance during the period May 21 to September 21 inclusive, regardless of whether you qualify for the employer's national insurance allowance, simply because national insurance for directors is calculated on an annual basis. Any Class 1 employer's national insurance due on this level of salary only becomes due in the last 3 months of the tax year. That is January, February and March, and that is assuming your limited company does not qualify for the national insurance allowance. And the furlough scheme is actually scheduled to end on the 30th of September 2021 anyhow. If you are making any pension contributions on behalf of yourself, the director or other directors, then this obligation remains with you or your company depending on who is making the contributions. The government does not provide any support for this. July 2021, the amount that the government will contribute will start to decrease and your claim will be £733.25. That's 70% of your director salary. In order to qualify for this, your company has to top up the remaining 10% of £104.75, giving a total of £838. Finally, for the final 2 months of August and September, the government will only contribute up to 60% of your salary. So as you can see on screen, your company will gradually bear 20% of your salary. And on a final note, whilst we don't want you to have any sleepless nights, we do urge you to double check your historic as well as any present furlough claims, as HMRC have recently announced a £100 million COVID fraud task force which will hope to recover as much of the reported £3.5 billion of COVID-related fraud that has unfortunately occurred. If you have made genuine and innocent errors or overclaimed unintentionally, then head to the link in the description box below where you can find out more about possibly making amends. I hope this video has helped you understand the 2021 changes to the job retention scheme and taking you one step closer to knowing your numbers. As always, let us know in the comments your thoughts on today's video, or if there are any topics you'd like us to cover in the future. Finally, be sure to like and subscribe, as this really does help us get our content out there. This is Tony D'Angelo for the Accounting and Tax Academy. Thanks for tuning in.